now the session Institutional Crypto Adoption, the lot of liquidity provision and trading strategies. This session promised to be a highlight, focusing on Web3 startup aiming for global impact. Without further delay, let me introduce our speakers. Everyone, please clap your hands. Please welcome CJ Fang, Head of Sales Apex and a Mayor at GSR. Woo! And next speaker is Zabi Mohebulzada, co-founder of Bluefin. Woo! And the next speaker is Emily Bao, Head of Sport Business Unit at Bybit. Woo! Moderating this session is George Chu, Portfolio Manager at IVC. Thank you.
Hello everyone, let's get started. Thanks for coming to listen to this panel. I hope you guys, especially our speakers, enjoy Kyoto so far. So today in this section, we will be talking about the role of trading and liquidity provision in the current crypto market. So my name is George. I'm portfolio manager in IVC. We are a Web3 venture fund that has invested over 200 portfolio across Web3 gaming, dipping, infrastructure, and AI. So pleasure to be the moderator in this section as we have three amazing speakers coming to join this conversation. So before we dive into the questions today, I want to hand over to our speakers to give us some short introduction of themselves and the companies they are representing. So maybe we start from Emily.
Hello everyone, I'm Emily, Bybit Sport Team Leader and Bybit Web3 Evangelist. Thank you for having me here. Very excited to meet you all here in Kyoto. This is my first time attending IVC Crypto, even though I've been in this industry for 6 years, but it's my first time here. So thanks for having me. It's quite hot summer, right? Recently, the heat weather, but the market is very cold, especially after the Mt. Begins the repayment in Bitcoin. But I think that is exactly the reason why we have this conference here today. So I also want to take this chance to share some good news from Bybit. So maybe some of you already know, so over the past 8 months, Bybit spot market share just doubled. And now we're becoming the second largest crypto exchange just after Binance. And also Bybit Web3 wallet, we just hit 10 million wallet addresses milestone. Yeah, so thank you so much for all the 35 million global users who registered on Bybit. Yeah, and also recently we opened a new office in Amsterdam, in Netherlands, and we're gonna have a grand opening ceremony in August. We have a secret guest, so maybe we can see you, in Netherlands in August next month. Yeah, so thank you for having me here today, and because now we gather here in this beautiful city of Kyoto, I would like to introduce myself and Bybit in Japanese as well. Yeah, but sorry, I need to apologize in advance for my limited proficiency in the language. I'll try my best, okay? Sorry to bear with me.皆さんこんにちは。バイビットの現物取引チームリーダーでバイビット Web3 イベンジェリストであるエミリーです。IBS クリプトは初めて参加しますが、お招きいただきありがとうございます。暑い夏ですが、でも最近の市場は非常に冷え込んでおり、はい、メトコックスでビットコインが返済を仕返ししたため、でもだからこそこのイベントは重要です。はい、ここでバイビットからの良いニュースがいくつか共有したいと思います。過去8ヶ月間でバイビットの現物市場シェアは倍増し、バイナンスに次ぐ世界で2番目に大きな暗号資産取引所となりました。また、バイビット Web3 ウォレットは1000万のマイルストーンを達成しました。バイビットに登録していただけた3500万人のグローバルユーザーの感謝します。バイビットを選んでいただきありがとうございます。 またアムステルダムに新しいオフィスを設立しました。これからも皆様の変わらぬご支援をよろしくお願いします。
Awesome. Thank you very much. Thanks for having us, George. It's awesome to be here. It's actually my first time in Kyoto and also in Japan. So one, it's been a great opportunity to just experience the city as a whole. It's very different to what I was expecting, but in all of the right ways. And then also, first time being here at this conference. So all around, just super excited to be here. I've been we've been building in the industry for about 4 years now, and so with Bluefin, our core product offering started out with decentralized perpetuals. We're now, expanding that to grow more into, becoming a financial ecosystem as a whole, and so, we're leaning into spot. We're also, exploring infrastructure as well. The company we started in 2020. A lot of the investors that we have are both major traditional institutions, but also some of the more prominent ones within crypto, including GSR as well, who is actually one of our first investors in our seed round. So overall, it's been a great journey, and I think one of the things that I've realized as a builder is that whatever's happening in the market, and many times you just gotta keep your head down and build, and you just gotta be aware of what's happening around you, whether it's regarding regulation, the macros, and everything. And so, excited to be here and talk everything related to institutions.
Thank you, Xavier. CJ?
Hey guys, I'll keep it short and sweet so we can get into the questions. My name is CJ. I run the Asia and Europe sales teams at GSR. We are the largest altcoin market maker in the world. We have a global presence. We have more than 175 clients, and we are the only market maker in the world regulated by the Monetary Authority of Singapore right now. A bit of background about myself. I began my career in traditional finance. I used to be at Morgan Stanley and Nomura on the trading floor up in Hong Kong. Did that for more than 10 years. And since I joined crypto, it's been a hell of a ride. Thank you for having me.
Thank you for the warm intro from all the speakers. So I want to start this session with a high-level question. So talking about like institutional adoption, right? So basically they can be separated into two parts. One is more like the infrastructure application, right? So which is blockchain, right? We see like the financial institution utilize blockchain in their banking operations, or maybe like enterprise leverage blockchain technology in their supply chain management, right? And the other part of adoption is actually quite relevant to our topic today, is the investment opportunity in capital market. And this year, we also see the approval of spot ETFs. So I want to ask, the first question is, so how does this institutional adoption trends affect maybe like investing or maybe like trading in the current crypto market? Maybe we start from CJ.
Sure. There's no doubt about it, right? The ETFs is groundbreaking. It's groundbreaking because it's symbolic for what it stands for. It stands for acceptance from traditional finance. And I know we always talk about the market cap of crypto, Bitcoin, Ethereum. Let's not forget the fact that if you look at market capitalization on the NASDAQ, on the S&P, you're talking about real size, real funds. It is absolutely necessary for our industry to get some form of adoption from an investment perspective from these sorts of players. The only word of caution I will say is this: traditional financial institutions take time. They don't operate like us. The way they do it, if they want to get approval to trade an ETF, it can take up to a year to do it. And even then, when they do it, they probably won't go down the credit curve. Do we see a day where we have the top 50 coins as ETFs? Probably not. They're going to focus on the Bitcoin, the Ethereum. But that is enough to give us a solid anchor in our capital markets. The markets right now are extremely volatile due to a myriad of news. But if you were to backdate it and look how the markets have traded ever since the ETF was introduced, it has moved very in line with macroeconomics. And that is key, because by doing that, you give these traditional fund managers and institutions an understanding of how can they actually trade this market. That gives confidence, which I think going forward will slowly lead to more and more size from them.
Sabi?
Yeah, for sure. And I think CJ made a lot of great points here. It's important to zoom out and just look at the process of institutional adoption more holistically. I think, and my observation has been that first, it starts with awareness. And I think we're past that phase and stage. And then we lean a bit more into intrigue, which I think is a natural next step. And then after that, it's like more around the lines of approval, which then leads into adoption. I think that we're in this phase somewhere between approval and adoption. We're starting to see more institutions, step their foot into the door. And, I think the next natural step here is that they embrace the technology and start to work with it. From my perspective, we work, we're an exchange. So we work with a lot of institutions, predominantly ones that are, crypto focused. And one of the things that we've noticed is that liquidity is very scarce. And so what that means is, a lot of the exchanges, particularly the decentralized exchanges, they're playing games of, tug of war for the same liquidity that is, largely incentive driven. And so, before we start to see that uptick in liquidity, we're going to have to get a lot more clarity from like a macro side, but also just, regulatory. And, a lot of the major traditional institutions that we have on our cap table, including like Tower Research, SIG, Brevin Howard, they won't touch, and this is the exact discussion that we were having backstage as well. They're not going to touch DeFi with a 10-foot pole unless they know for sure, what's next for them.
Yeah, I think for sure, like the institutional involvement is always playing a very critical role in the crypto markets. If you look back to the last bull run in 2020, DeFi summer, actually the institutions already, pushed very hard, significantly into the crypto. They become very interested in Bitcoin and actually become very active after the Bitcoin halving last round. But this year, starting from the beginning of this year, this cycle is all about the Bitcoin spot ETF. Yeah, so it's huge. It's very significant. I think the most important thing is the spot ETF provides easier access for the TradFi and the institutions to adopt and to add cryptocurrency into their portfolio. And also the regulation make it a little bit clearer about the direction of the regulation for the next steps. Yeah. And also after the Bitcoin ETF approval, I think this cycle, the key narrative is all about the ETF. After Bitcoin, and now it's the ongoing discussion about the ETH ETF, and also recently VanEck filed the Solana ETF approval. I think GSR also published a report about this. Yeah. So let's see what's gonna do next. Yeah.
Great. Thanks. I want to echo on what the speaker just mentioned, that I think it really takes time for institutions to get into this crypto space, right? And although like the big ETF narrative actually dominate the market during the first half year, we still need more catalysts to drive for the bull run of this cycle, right? So CJ is just mentioning about the macroeconomic side, right? So I want to ask a follow-up question. So how does the current macroeconomic situation, affect like the liquidity in the crypto market right now? And what kind of expectation can we expect maybe going forward?
I think when it comes to participants in our market, you have to bifurcate it into two categories. You do have the traditional guys who look at it from a spot ETF narrative. They look more at the macro factors. When we talk about that, let's be realistic. Inflation, interest rates are what has been key drivers for this. However, interestingly enough, crypto does have some crypto native nuances which have affected. Equity markets have been going up in the last couple of weeks, right? With anticipation of what's happening on the elections, their side, the rate cuts expectations. Crypto's been way down. The Mt. Gox scenario and just general approach to what we think is happening over the summer. The other interesting part about this, though, is there is the crypto native group of people. And these people, actually, their wealth circulates within the crypto ecosystem. And if you were to speak to most crypto native folks right now, with the move that we have had, many people are sitting on dry powder waiting to come in. And the reason why is if you anticipate a rate cut, 1 to 2 of them in the coming months, it will bode well for the market. And I think that's what we're heading towards. If you look at where we stand now on a macro basis, the ECB has cut rates. They have never historically done it ahead of the US. The US needs to catch up. The inflation data is in the right direction. So could we see up to 2 cuts? I think it's viable. And I think from here on what that means for the market is I am constructive. I'm not going to say I'm bullish, but I'm definitely constructive. The last point I have is this. If you were to compare where Bitcoin is now relative to where it's been over the last 3 years, we're still in a bull market, guys. I know it's dropped 20%, but you are still in a bull market. And I think that's something you should never lose sight of. When people look at the S&P, when they look at their FX positions, it's over 1 year, 3 year, 5 year, 7 years. In crypto, we are still up.
Zabi?
Couldn't have said it better myself. Echoing a lot of the points that CJ made, I think there's a number of different economic indicators to consider, especially when thinking around, macro markets as a whole. I think one of the things that we typically try to think about is, there's a mix of economic indicators and macro conditions that you can predict or you can anticipate, and then there's just some that you cannot, right? I think a lot of the geopolitical ones, I would bucket into that piece of like, you don't know what's going to happen. I think some of the instances with the war earlier this year that happened, I think that's very hard to predict, and it's one of the things that you can't control. And so once again, I think from the perspective of builder, we need to, anticipate that there's some things that are fully out of our control, and there's some things that are in our control. A lot of the volume that we've seen in our exchange, it's very, very tied to what's happening around us. So everything, related to interest rates, right? It's very difficult to deploy capital when it's, expensive to deploy capital. And so, if we were to look at towards the tail end of 2023, we were, trading over $1 billion, close to $1 billion every week, or, even over that, right? Now it's, significantly dropped, and that's because of like all the uncertainties around us. And so, I think it's easy to really just zoom into instances like yesterday where the markets, really start to drop. But, you have to just ask yourself the bigger question, which is like, what's it going to look like when you zoom out and look at it from like a 12-month or 24-month point of view? And I think in that direction, we are trending upwards.
Fantastic. Emily, what's your thought?
I think the speakers already covered pretty much everything. It's quite like a dynamic and interesting push and pull relationship with the macroeconomics and the crypto markets. When the high inflation is become more expensive to invest in the capital, and when the high inflation, usually the investors want to hedge the inflation, so they're gonna inflow to the crypto markets. As we can see now, after the Bitcoin ETF launched. Until now, in 6 months' time, the cumulative volume, I think, already surpassed the $300 billion. It's huge, right? So it's really hard to proceed the next the market condition because there are so many uncertainties, especially as you mentioned, the geopolitical effects and all these incidents. But I think in general, we need to keep the generally positive mentality in this market.
Fantastic. Basically, policy drives liquidity, which drive assets, right? So for the next question, we actually have some discussion before this panel, right? So in the previous cycle, we see some, liquidity rotation from major coin to altcoins, right? So for example, back in 2021, we see the DeFi summer, driven by protocols like Uniswap, Aave, and like the NFT frenzy that pushed Solana to almost 300, right? But right now, it seems like in this cycle, the majority of liquidity is only flocking to Bitcoin and Ether, right? So I want to ask about your opinions about the altcoin, right? Do you expect there will be an altcoin season in this cycle? And what kind of driver can really initiate this wave of rally? CJ, you are dealing with lots of startup or altcoins in market making, right? So what's your thought on that?
I'm going to say unpopular opinion. 2021 is not going to happen again. What we saw in that altcoin space was a function of walls when it comes for information, understanding, FOMO amongst investors who do not understand the market, and everybody getting on the bandwagon. We're not going to see 2021 in that form anymore. What's happened, and if you think about why has there been a rotation recently, and the focus this time has been on the majors, we said it earlier on, it is the narrative. The narrative is the ETF. What does this do? It brings crypto as a segment into the traditional spotlight. You now have CNN, BBC commenting on this, Bloomberg reporting on this. This was unheard of in 2020, 2021 and previous cycles. What does it do for us as an industry? It gives us a very strong anchor, and I explain why. Imagine, and the reason why is this, if there is going to be another push from altcoins, it will not come from traditional finance. I'm saying this now, and I'm declaring it now. And the reason why is, having spent more than 10 years in a bank, the approval processes to get a bank, for instance, to buy Sui, Aptos, Cardano, it's almost impossible. They just can't agree to it because of all the regulatory environment constraints. But when these traditional financial institutions eventually come into the Bitcoin and the Ethereum spot ETFs, naturally that drives up the base level across the board. What you would then see is almost a correlation in crypto native participants, because there are a lot of whales in the space who are sitting on Bitcoin, are sitting on Ethereum, waiting for this to happen. When that happens and they've made their money on Bitcoin and Ethereum, these crypto native whales, in my opinion, will then start rotating into altcoins. So it's going to be a causal effect cycle. It won't be so direct. And any of you holding up for the 100x, pace yourself. I don't think it's coming anytime soon.
Zabi, what's your take on this?
It's an interesting question, and I think one of the observations that I've had, and especially in recent times, I've traveled to South Korea where a lot of our traders are based, and one of the observations that I had is retail is getting a lot smarter. And what this means is, everyone is doing significantly more due diligence in, where they're deploying their capital. And this, in many ways, is, causing, a certain degree of maturity to come into the industry, which I believe is needed. A lot of projects, we're starting to see higher quality projects. Rug pulls are becoming less and less common. It's still going to happen, whether we like it or not. But I think what this is doing is it's in many ways forcing the industry to move in the right direction. To expect, 100x returns, I don't think that's a great thing for the industry. You're not going to get that in traditional finance, and so I'm optimistic. I think there's a lot of great projects and altcoins that are surfacing. The most important thing to consider is whether there's utility for a lot of these tokens. And so when you're thinking about where to deploy your capital, everyone is taking one additional step to really do due diligence on where they're investing. And so and again, to the point you made, right? It's very unlikely that we're going to start to see behaviors like we did in the bull run of around 2018 or 2021. And I think that's a good thing. I think it shows that the industry is moving in the right direction in more ways than one.
I think if you look at the market, so the limited liquidity and the capital mostly influence to Bitcoin and ETH, but majorly Bitcoin only, right? But I think from the personal, the individual investor perspective, the following is not financial advice. We also noticed some new kind of tokenomics projects came up. For example, Solana's meme coin. Personally, I'm a big fan of meme. I started trade meme last year in December. So where is my hat? Hat stays on. So when I first saw the meme coin wave, I found it's very interesting because I didn't participate the previous meme cycle like Doge, Shiba. But when I saw wave, the tokenization just got me. Yeah, it's very brave experiment, right? And then we saw the 3 months ago, the super meme cycle just came in, and everybody is talking about meme coin. And but to be honest, it doesn't mean that meme coin is the future. We still see a lot of the good, solid projects it's building, and they're solving the real world problems. So I think we saw more and more new projects, and the new projects came into this market, and we as crypto native start to accept it. And also we saw institutional clients, they started to pay attention to meme coin and started to do some initiatives around this. I think it's a good signal. Yeah.
Great. I really love what speaker just mentioned, that right now I think people in crypto space are getting smarter and doing more due diligence. I think although we might miss opportunity to get 100x, right? But I think this is very positive to overall crypto space. People are moving away from speculation and finding the real value of innovation or adoption. I think it's really positive things. So in this panel, right, we are talking from the overview, macroeconomics, and also like the altcoins, right? I think audience here are very excited about this cycle. So I want to ask the final question from all the speakers, right? What kind of strategy or trading advice you will give to the audience here to help them prepare for this cycle going forward? CJ?
This is why you get arrested in traditional finance, for making comments like this. But no, I think maybe let me rephrase your question. It's not how should you trade this cycle, it's how should you invest in this cycle. The fact of the matter is, it is extremely nascent. The fact of the matter is Bitcoin is still one of the best performing assets this year, so to speak. And if you take all of that into consideration, we have barely started. To give you context, and maybe this is a bit of an anecdote, I spend a lot of my time dealing with financial institutions while the rest of my team deals with the crypto native and the Web3. And these financial institutions have now finally begun the process of asking, how can I give my clients access to crypto? And because of that, I think when that procedure comes in, and we were talking about it earlier on, that whole geopolitical risk needs to quieten down a bit, rates need to be cut, the macros need to be in a better place. And once we have all of these footings, it becomes a much better investable environment. I think, and I say this to most of the family offices I talk to, you should always have a bit of crypto in your portfolio. Even if you want to do a basket of just layer ones, just to get exposure, I think from here is the right way of doing it. And I'll tell you the best anecdote, all of you have cold storage wallets, buy it, put it in a safe, forget the combination, and open the safe a year from now. You will see a very different environment. That's what I anticipate, rather than trading directly day to day.
Thank you. Zabi, what advice you would give to audience here?
Again, tough question. I almost got liquidated yesterday, so I'm not sure if I'm the best person to be giving advice on trading. But I think, you know, one of the most important things to note is it's a very volatile market, right? And a lot of that is driven by the fact that, you know, liquidity isn't there. So instances like yesterday, you know, it's very difficult to predict. It just focus long term, right? When you inherently focus long term, you mitigate, you know, a lot of the risk that comes with the volatility that exists in the current markets. And so, you know, for myself, the way I think about it is I try not to trade actively as much. As ironic as that sounds, we, you know, run an exchange. One of the reasons why is it keeps me up at night. And so when you find a project that you're passionate about, that you truly believe in, that, you know, supports all the fundamentals that, you know, crypto is about, invest in it, you know, forget about it, and see where that takes you, you know, in a couple of years. And I think just like doing your research, just doing as much due diligence as possible, you know, making yourself aware of what's happening, right? It's really important to, you know what's happening in the regulatory space. It's really important to understand the macroeconomic indicators. And so just educating yourself as much as possible. And then lastly, I think it's also really important to understand the products that are out there. You know, knowing what you're investing in, and, you know, knowing a lot of the platforms that are available for use is also just a great way to overall increase your, you know, awareness.
Yeah, I think the first principle, like risk management, is always the key to make sure you're always in the game, not blow up, not get liquidated, and trying to find the real stories, the right stories that can stand the test of time. And also start to learn some like investment strategies, start to using some trading tools or investment tools where you can find easily. Yeah. Okay, I think that's all, yeah.
Thank you. I think we are right on time. Thanks for all the speakers of your insights of this panel. And I hope you guys enjoy the rest of your Kyoto stay, and I'll probably see you guys next year. Thank you.
Thanks for having us.
Thank you very much. Thank you. Everyone, once again, please give our guest speaker a round of applause. Thank you. Following the